Good morning, everyone. I hope you can hear me.
Yes, good morning. We can hear you.
Thank you. We'll be starting at exact 11. Good morning, everyone. On behalf of Eki Energy Services Limited, I extend a very warm welcome to all the participants on the Q3 FY24 financial results discussion call. Today on the call, we have with us Mr. Manish Dapkara, Chairman and Managing Director, and we have Mr. Mohit Agrawal, our Chief Financial Officer. I hope everyone had an opportunity to go through an investor deck and press release that we have updated on the exchanges and on the company's website. A short disclaimer before we start this call. This call will contain some forward looking statements which are completely based upon a belief, opinion, and expectations as of today. These statements are not a guarantee of future performance and involve unforeseen risks and uncertainties. With that, I would like to hand over the call to Mr. Manish Dapkara for his opening remarks. Over to you, sir.
Yeah, thank you, Monica. Uh, Greetings, everyone, and a cordial welcome to all the participants. We appreciate your presence today as we delve into the Quarter 3 FY24 performance of Eki Energy Services Limited. Allow me to extend my heartfelt wishes for a joyful and successful 2024 to each one of you. I am joined on this call with Mr. Mohit Agrawal, our Chief Financial Officer. I trust you have had the chance to review our investor deck and the press release, both of which are available on the exchanges and the company's official website. Throughout the past year, the international carbon markets experienced a slowdown after years of rapid growth, with persistent uncertainties stemming from inflation and broader macroeconomic landscape showing no sign of relenting. The conflict between Israel and Palestine served as an additional catalyst, intensifying the destructive flames of war and contributing to the overall turbulence. Evolving regulatory concerns further complicated the landscape, creating an intricate web of compliance and accountability for market participants. The absence of concrete outcomes at COP28, particularly in operationalizing Article 6 mechanisms, added another layer of complexity. In the aftermath of COP28, where notable pledges were made and some notable funds were committed for significant climate actions, it is disheartening to find that the actual deliverables fall short of what is imperative to achieve our climate goals. The failure of country negotiators to adopt two pivotal texts on compliance in the voluntary market modalities and international trade has left us in a state of uncertainty. Despite high expectations for progress under Article 6.2, which is bilateral or multilateral cooperation, and Article 6.4, compliance carbon markets, negotiations face challenges and failed to secure a deal, resulting in persistent uncertainty. The International Emission Trading Association criticized the Politicization of carbon markets, highlighting attempts to confine policy discussions to specific bodies. After 2 weeks of intensive talks at COP28, a deal of Article 6 carbon markets remains elusive, leaving UN carbon markets in a state of ambiguity. However, amidst these challenges, the voluntary carbon market emerges as a beacon of hope, with positive affirmation from government officials, conservation organizations, and industry groups. The VCM is recognized as a driving force capable of instigating genuine change, enhancing people's life, and facilitating tangible emission reductions. The renewed commitment to a uniform integrity approach positions the voluntary carbon market in a pivotal role, offering a great space to enact crucial transformations on the climate change stage. In fact, voluntary demand for companies remain the primary driver of the market activity. New investors, financial products, technological platforms, and service providers are laying the foundation for what some expect will be the decade of significant growth. Different initiatives seek to promote standardization and improve transparency in carbon credit markets, seeking to encourage market growth and integrity of corporate action. In a commendable initiative, the Government of India recently amended Carbon Credit Trading Scheme (CCTS 2023), as announced by the Bureau of Energy Efficiency under Ministry of Power in June 2023. The incorporation of the offset market and the provision allowing non-obligated entities to participate in the CCTS represents a progressive step. This move is poised to create new opportunities for Indian decarbonization project developers within the national carbon market. Setting market conditions aside, EKI remains steadfast in its pursuit of environmental stewardship and active participation in global climate action. Our commitment extends beyond environmental initiatives with equal dedication to community development and upliftment. We recently forged exclusive partnership with Indian Oil Corporation Limited to advance clean cooking solution globally with Surya Nutan, an innovative indoor solar cooking system designed and patented by IOCL's Research and Development Division. Eki Energy Services takes the head in managing the comprehensive production and distribution of Surya Nutan while mitigating carbon emissions through carbon finance. With a proven track record, EKI has introduced clean cooking practices to over 2 million households in India and Africa, entirely funded by the climate finance. This collaboration signifies a commitment to advancing clean energy practices and fostering a more sustainable future. The cooperative effort aims to bring about positive change by promoting accessible and eco-friendly cooking solutions in the market. Moving forward, EKI subsidiary GHG Emission Reduction Technologies Private Limited in Nasik and Thermex On-Site Energy Solutions in Pune have entered into a manufacturing and supply agreement for briquettes, biomass briquettes. Under this agreement, the latter will ensure an uninterrupted daily supply of biomass fuel. This green biofuel facility also benefits local farmers as agricultural waste serves as a raw material for the production process. We are also glad to announce the inauguration of our new biomass briquette manufacturing plant in Dindori, Nasik, as part of GHG reduction technologies' ongoing commitment towards clean energy transition, mitigating global warming. Additionally, EKI Power Trading Private Limited, a subsidiary of EKI, has successfully acquired a Category 4 license from Central Electricity Regulatory Commission to engage into the power trading business. We are poised to enter and operate within this vertical in the near future. As we navigate this intricate terrain, it becomes imperative for stakeholders to remain agile and adaptive in their response to the dynamic interplay of geopolitical events, regulatory shifts, and global economic conditions. The interconnected nature of these factors underscores the need for a comprehensive approach, fostering collaboration and innovation to overcome the challenges and propel the carbon market towards a more resilient and sustainable future. In an era of highlighted environmental concern and awareness, EKI is strategically positioned to reshape the carbon market. Our innovative interventions involve a comprehensive screening process for carbon credits, carbon offsets, fostering trust and transparency. Embracing the dynamic carbon market landscape, our focus is on fortifying carbon offset development methodologies through digital monitoring, reporting, and verification. This elevates the credibility of carbon market initiatives, enhancing stakeholder trust and the overall market credibility. Our forward looking strategy aligns with financing the transition to a sustainable future, addressing the gap between climate action announcements and implementation. Our sector's transformative potential, combined with strategic positioning, positions us to capitalize on the market potential and carbon markets of tomorrow. With this, I hand over the call to Mr. Mohit Agrawal to discuss over the financial performance. Thank you.
Thank you, Manishi. Thank you, and good afternoon to everyone. Turning to our financial performance in the third quarter of FY24, our standalone revenue reached to 41.5 crore, with a standalone loss amounting to rupees 21 crore. On a consolidated basis, revenue from operation is 43.5 crore. The consolidated PAT was recorded at a loss of 23.33 crore. For the first three quarters of FY24, that is 9 months of the financial year 23-24, our standalone revenue reached up to 182 crores approximately, and consolidated revenue is 185 crore. We wish to inform our shareholders and stakeholders that the company is a well liquidated from own accrual and negligible debt as on today. I kindly ask a coordinator to open the forum for FAQs now. Thank you.
Thank you, Mr. Dekara, and thank you, Mr. Agrawal. Anyone who wishes to ask a question may kindly raise their hand. We have the first question from Mr. Karan Sharma. Mr. Sharma, kindly unmute your mic. Thank you. Mr. Sharma, can you hear me? Okay, he has typed his question.
Are you able to hear me?
Yes, sir.
Okay. Hello, everyone. Good morning. Hope everyone is doing fine. So I had some questions. First thing is, there's news in the market about $1 billion MOU with Jaspong. Can you please highlight about it? How much revenue is it going to generate for us? Hello.
Yes. Hi. I will request Manishji to answer on this.
Yes. Yeah. So thank you for asking this question. The Jaspong Group is based at Ghana, West Africa, and they are one of the largest company based in Ghana. They are the sole company within the region, within the Ghana region, which is responsible for all municipal solid waste management within the country. And recently they had signed 4 agreements with Switzerland government through Click Foundation to supply Article 6.2 compliance carbon credit. So our accountability and responsibility will be to whatever the potential they do have, whatever the projects, waste management related projects they do have, whatever the network they do have within the Ghana, to mobilize carbon finance so that the project will do get additional revenue stream for the waste management projects. And further, we will do help them to deploy community-based projects like cook stove, water filter, and other different activities, not only in Ghana but in the whole West Africa, wherein they do have network, because since they are into the waste collection and segregation for the processing of whatever the municipal solid waste is there. So it is a very good opportunity for us to work with them to generate carbon credits into the voluntary carbon markets through Article 6.2 or 6.4 of the Paris Agreement, or voluntary carbon markets. That means through various standards like Verified Carbon Standard, Gold Standard, Global Carbon Council, and other different standards. So our accountability responsibility would be to arrange finance for them to mobilize carbon credit in the international compliance and voluntary carbon markets, so that not only their return, but whosoever wish to invest over that specific platform across the world, either from the debt or equity side, we will do mobilize everything for that specific platform.
It's going to take time, or like how soon can we expect the revenue to come into our books?
So we'll do form a JV there, and that specific JV will do generate the project. So as of now, they do have many landfill sites, many waste collection activities that they are doing. So voluntary carbon credit, compliance carbon credit, and international voluntary plastic credits are eligible to get mobilized. So as soon as the JV will be formed, the performance of the activity which we have signed through the MOU as of now will do get operationalized.
Okay, I had one more question. Like it's written in the PPT that we have around 12.4 million credits. Why are we not selling it and showing profits? Like, would selling them in future benefit us more? Like, how much worth is it in the worst case scenario, like at today?
Yeah, so actually the credit used to get traded on over-the-counter basis, and there is no any national or international benchmark for getting the pricing related to the present inventory we do have. As of now, due to various reasons that I have mentioned earlier, like Russia-Ukraine war, or the war which is happening between Palestine and Israel, it is impacting the demand for the buyers located in developed economies like Europe and US. And further, the criticism that had been done by Western media related to the greenwashing issue, or the carbon credit business, many buyers are waiting to get clear guidelines from the VCMI, which is one of the governing body, voluntary governing body, which is going to give clear directions or guidelines related to how to avoid greenwashing. Greenwashing means if the buyer is only buying the credits, and if they are not reducing their emissions, then this is called as a greenwashing. So many buyers are there in the Western world, at Europe and US. They are only buying the credits and they are not reducing, and that means they are not supporting the Paris Agreement goal to reduce the emissions and cap 1.5 degrees centigrade temperature goal, so as to achieve 1.5 degrees centigrade temperature goal. And so Western media had criticized many buyers, and buyers are now waiting to get clear guidelines related to what is the definition of quality of credits and what is the definition of to avoid this greenwashing issue. So we are anticipating in next 6 months timeline, once the full guidelines from ICVCM and VCMA will do come, the trust, transparency, or confidence again will do come in the international voluntary carbon markets. And since the compliance carbon market through Article 6.2 or 6.4, or India's carbon credit trading scheme, all these markets are not very much functional. Only Article 6.2 market is functional, and we are very much active in that specific market. But that specific market is quite nascent in nature. So to summarize, voluntary carbon market, we do anticipate that in next 3 to 6 months timeline, once ICVCM, VCMI, and VCMI will do come up with their clear guidelines, the market sentiments again will do, the buyers sentiment to buy the credits again will be back, and definitely the demand which we have seen during year 2021 and up to mid 2022 calendar year, again it should be back. And then whatever the inventory that we do have on our books, and the new inventory which is upcoming through the consulting or advisory services that we are giving for various projects across various nations, then everything we do anticipate that it should be there in place.
This is 6 months is like as you told in the last con call, it's not for break even. It's like EKI's old glory days, right?
Yeah, please pardon.
This 6 months time, are we going to take to reach break even, or like to reach to EKI's old glories days?
Actually, it depends how fast this VCMI and ICVCM will do come up with their guidelines, and how fast the buyers or the sellers will do adopt whatever the guidelines that's two governing bodies will do bring. So, as you know, many companies across the world are very much conscious related to the sustainability and greening their products and services. So it is not a one-time activity which organizations used to do. That means that probably they might have done during year 21-22. It is the ongoing process till the time they do not become net zero. They do not achieve the net zero goals. So definitely after getting this clear guidelines, more and more buyers should come up and the market, like if you see many companies like BCG, McKinsey, they have done study that by year 2030, this voluntary carbon markets should rise. As of now, the overall market size is ranging in between 0.5 to $2 billion across the globe, only voluntary carbon market. And these international organizations had anticipated that it should be in between 10 to $200 billion. So that means more and more demand should come, and more supply will do also then follow the same to meet the buyer's demand. So once this trust and transparency or the criticism phase will do get over, or you can say the guidelines will do come from these two governing bodies, we do think the market sentiment for the buyers who are buying the credit to achieve their carbon neutrality or net zero goals should be there in place. And definitely we should see multiple number growth in near future.
Yes, sir. Sir, only last question regarding IOCL deal. Like, how many carbon credits will one cook stove generate? Like, how much money are we putting in as an expense for it? Like, what will be the revenue per cook stove?
See, as per the agreement that we have done with IOCL, we are anticipating 2 million cook stoves should be distributed in next 2 years timeline. And each cook stove used to generate around 6 to 7 carbon credits on per annum basis. And these cook stoves, the credits can be sold in the voluntary carbon markets as well as in the compliance carbon markets. And yeah, so definitely this specific project will do also support in our top line and bottom line quite significantly.
Thank you, Manish sir, for answering all the questions. Thank you.
Thank you, Mr. Sharma. Thank you, Manish sir. We request all participants to please limit their questions to one question per participant. Thank you. Next question is from Mr. Bubna. Mr. Bubna, kindly unmute your mic. Mr. Bubna, can you hear me? So are you there? Okay. Then, Mr. Bubna, are you there?
You need to unmute yourself, Mr. Kaustuv Bubna. Then
Okay.
only you would be able to speak. Yeah.
Fine. While
Yeah, can you hear me?
Yes.
Can you hear me?
Yes,
Yeah,
sir.
hi.
Thank you.
So, so I wanted to understand, regarding this cook stove project, which you had made an investment in, this cook stove project that you had made an investment in, I wanted to understand what type of ROEs, return on investment, do you expect from this cook stove project, and what rates do you need to achieve those ROIs? And currently, what are the rates for the carbon credits coming out of the cook stove project? And what are the rates you would need from those carbon credits to achieve your target ROEs? And what are those ROEs from the cook stove project?
Yeah, so for the cookstove projects, the rates are ranging in between $2 to $5 per carbon credit. Then the rates depends on the location where the project is located. For the African region, we used to get higher rates as compared to the projects which are located in Asian region. Further, the rates used to vary because of the vintage, because of the program like BCS or Gold Standard, which we use. So various parameters are there. Usually, the ROI for such kind of cook stoves, ideally, it should be within 2 years from date of commissioning.
No, but what should the ROI be? I mean, what is your target? What type of ROI should we expect from this project? You all have made
Two
a
years.
capital investment.
Yes,
No,
yes,
two
within 2
years
years.
is 2 years is the timeline. What is the rate of return? What is the return? 20%, 30%? What type of return on invested capital should you receive from this project? You made a capex, right? You've done capex. So on that capex, what type of return should we expect?
Mohit?
I'm answering Manish for
Yes,
this.
yes.
Yeah, what Manish has told that 2 year is a payback period. You will return, you will get your capex in within 2.5 years, and ROI generally it depends on the rate of the carbon credits at the time of trading or issuance of that, but it will be somewhere around 18 to 20%.
No, correct. So my question is based on current rates, based on the rate, based on the
That's why
carbon credit rate that is there today, if we
today,
assume that this rate stays,
yeah,
when will the payback be and what ROI will be there?
yes, I'm 18 to 20% is basis on the current scenario, current rates going on. It might go up in near future if the prices are gone up. And what we are expecting that within 3 to 4 year prices will go up because the market will also go up in by 26, 27, and our credits will get a start has been started from this quarter itself, and a substantial amount of credit will be flow to us from this calendar year end by this calendar year end.
How many carbon credits can you sell per year from this project?
It's depend. We have already installed around 8 to 9 lakh cook stoves as of now, and per cook stove credits will get per year. It's somewhere around 4 to 5 credits on an average. I'm talking.
And the rate per credit right now you said is $2.
2 to 5 what Manish has told with various factors like location of the
Hello. Hello.
can you hear me?
Yeah.
It's depend on the multiple factor what Manish has explained you also.
Okay, great. Thank you. Thank you so much. Thank you.
Thank you, Mr. Bubna. Thank you, Mr. Agrawal. Our next question is from Mr. Amit Sansi, requesting him to please unmute his mic. Mr.
Yeah,
Amit,
hi Manish. I just have a one question.
Hi,
You
sir.
know, in news we have read Eki Energy has signed a memorandum of understand MOU with Ghana's Jospong for 1 billion carbon finance, but we don't see any update on BSC website. So is it like we will be sharing this update on BSC website shortly?
Yes, yes. It will be done very soon.
Okay, ठीक है, sure. Thank you.
Okay. Thank you so much, Mr. Sansi. Thank you, Mr. Dapkara. Okay. Is there anyone else who has any question? Kindly raise your hand. Okay, I see one more. Mr. Vinod N. There is a question from Mr. Vinod N. requesting him to please unmute his mic.
Good morning. So I just had one question. So this is on the revenue recognition issue, which was flagged by the auditors last year. So is there any update on that, or do we see any changes in revenue pattern because of that?
Mr. Vinod, we have already stated the fact in our annual reports also and previous audit reports that on a conservative basis and after taking the expert opinions from accounting professionals, we have agreed with the auditor, and accordingly revenue for financial year 22-23 has been restated.
Thanks.
Mr. Vinod.
Sir, is that all?
Yeah. Thank you.
Thank you so much. Thank you, Mr. Agrawal. Thank you, Vinod sir. Mr. Sandesh Matre, you also have raised your hand. Kindly unmute your mic if you have any question to ask. Mr. Sandesh Matre. Mr. Sandesh Matre, sir, are you there?
Am I audible?
Yes, sir. Thank you.
Audible?
Yes.
Okay. So my question is, what in particular are the reasons for further revenue dip of almost 45% in this quarter compared to the previous quarter? And then second question I have is, what is the cash flow from operations this quarter and also the net cash flow?
Yeah, so I will do cover the reason for the dip in the top line and in the bottom line. So actually, as I've earlier mentioned, there are various reasons because of which the buyers they are not buying the credits as they were doing during 2021 and initial 2022. So the first reason is Russia-Ukraine war, because of which the high energy prices are there with the buyers community, and the voluntary carbon market had taken the backseat. The second one is the criticism related to related to the carbon markets, wherein there are two major concerns. One is the quality of carbon credits, like which type of carbon credit should be considered as the quality carbon credit, either year 2005 vintage credit, 2015 or 20 or 23, or what should be the technology where the project should be located. So all these concerns are there because as the underlying asset for all the credits is 1 ton CO2, but there are various features, or you can say characteristics of the carbon credits are there, wherein the rates used to vary for each carbon credits, and that is why the quality of carbon credit definition is the concern within the global community. Another concern is related to the greenwashing. That means the buyers are buying the credit, but a few of them are not reducing the same because of their own reasons. It may be genuine, or it may not be genuine in nature. So these two concerns, these three specific concerns, one is quality of carbon credit, another one is the budget pressure because of the energy prices, and third one is greenwashing issue. The buyers are quite skeptical to buy the credits, and they are doing the procurements slowly as compared to what they have done during year 21-22. So we anticipate in next 3 to 6 months timeline, once like earlier we were anticipating during COP28, all these specific concerns should get settled down, but the international negotiations for Article 6 carbon market, which will do directly or indirectly, might have supported the voluntary carbon market sentiments also. That specific negotiations during COP28 was not, that means the result was not very much conclusive. And that is why we are on the same position which was there earlier to COP28. COP28 means Conference of Parties meeting number 28, and the meeting every year the meeting used to happen at a specific place. Like last year it was there at Dubai, UAE. Next year during during this year, that means 2024, the COP29 will happen at Baku, Azerbaijan. And so we are anticipating, like ICVC and VCMI will come up with their guidelines in next 3 to 6 months timeline. COP29 will come up with Article 6.2, 6.4 clear guidelines by November, December this year. And so the full sentiment or criticism which is happening for the buyers or for the programs which are issuing carbon credits should get over, and the market sentiment again should come back. And so with that specific upward movement, the numbers will also grow, and that is the specific reason for the low numbers for this year. And
So
Yeah.
given what we know now, right, are we then anticipating that the revenues will go up from here, or are we are expecting?
Definitely it should go up, because this is the short-term phenomena related to the criticism of the markets, related to the war or energy prices issue which is there at the Western world.
Yeah.
And once it will do get elevated, everything should come in place, because
I mean the immediate quarter, right? Do we anticipate the revenues to further dip in this quarter, or are we anticipating a rise from here?
I think till the time ICBCM, VCMI or COP29 will do not come up with clear guidelines, the market situation will do remain the same, whatever we are seeing during last 6 months. I do anticipate like it should not go further down, because whatever the bottom price is there that we saw during last 6 months, it should not go below the same. So it should go up once we do have clear guidelines from the potential regulators.
Good. And the other question was around the cash flow from operation and net cash flow this quarter.
Yeah, Mohit?
Cash flow from operation is not handy with me, but I can give you the numbers that we were having a FD and in liquid asset or liquid cash with us somewhere around 128 crores in the form of FD or mutual fund, or you can say cash in a bank. In versus loan, you can say working capital was utilized somewhere around 16 crores as on 31st of December. 16 crore and 2 crores are auto loans or some other short-term loans. As on today, for the public at large, there is no working capital utilization. We are not using, and we have a surplus fund also. And we are very much positive that we will close this quarter with a surplus positive cash flow with us.
Okay.
Yeah.
Thank you.
Yeah.
Thank you, Mr. Dapkara, and thank you, sir. Are there any other questions, or is this the last question for the day?
There are various questions which people had written in Q&A section.
Okay.
So we may, since we do have additional 25 minutes, we may cover the same. Afterwards, we may close if there is no question in the written or verbal format.
Okay.
That was it.
So this the first question was already answered by you. The second one is how you see this Q3 result, since GM has been reduced but sales has been reduced.
This has been also answered.
This is also, yes, sir.
Yes.
So one question, this has also been answered, sir.
Yeah.
The third one, the
Third
Ghana.
one.
Yes. The fourth question is, what is the reason for 45%?
This is also done.
Yes.
This is also done.
And are we
This is
expecting?
also-
Yes, sir.
This one
So
is
I
also
think all the questions have been
Yeah, all
covered.
the questions have been catered.
Yes.
And dear participant, is there any further query or questions or clarification you can ask through Q&A, or you can raise the hand. No response has been received. I believe we have answered all the things. Yeah.
So I would request Mr. Manish Dapkara, sir, for his closing remarks. Sir, over to you.
Yeah, thank you. So I extend my sincere gratitude to each participant for taking the time to join this call. Your dedication and involvement contribute significantly to the success and vitality of our endeavors. Thank you very much and have a very good time. Thank you.
Thank you, everyone.
Thank you. Thanks from my side also to every participant.
Thank you, everyone. Once again, you may disconnect the call now.